Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
Gerald Celente, publisher of the Trends Journal, and he's founder-director of the Trends Research Institute. The Fall Trends Journal is out. You can get more at trendsresearch.com. Hey, Gerald, welcome to This Week in Money.
Oh, thanks for having me.
It is good to have you back. Welcome to Vancouver. It's nice to talk to you in person. This is unusual. We normally talk on the phone, but you're here in Vancouver for the SEED event. Tell me what that's all about. What's going on?
The SEED event is one of my favorite places where I give talks because it really looks at what trends forecasting is about, a holistic approach. For example, you look at economists, they only look at a basket of statistics. Foreign policy, they look at foreign policy. Environment, they only look at the environment. Retail trends, they look at the retail and the consumer. Oh yeah, they look at some economics. But they don't put everything together. They don't make the connections. All things are connected, like the blood which unites us all, they say. Chief Seattle allegedly said. So what I like so much about the SEED event is that it brings all the pieces together. And there are speakers from Deepak Chopra to others that really take a holistic view. Because if you're going to succeed in trends or anything, you really have to take the total view of things. You know, life is bigger. One of my sayings, by the way, opportunity misses those who view the world through the eyes of their profession. So the SEED event opens it all up and puts it all together.
It helps to take a more holistic approach to what's going on. It lets you look at the whole range of viewpoints.
Yeah.
I guess the biggest news these days has to be the winding down of the presidential reality show, Romney versus Obama.
What a disgrace. I don't know what American could call themselves proud after watching that last spectacle on October 3rd. It was an empty suit and a stuffed shirt. An emperor with no clothes, and a vulture capitalist craving for power. They didn't say anything about anything. Mm-hmm. And that's the best America's being offered.
Here's the surprise. A year ago in the Trends Journal, you said, on a stage where performance counts more than the heart, the fans, the electorate, will vote for the best actor. That actor will be the man who commands the stage, Barack Obama. What happened?
Obama bombed. You know, he just bombed. And we only picked Obama because, not because of anything of substance, just performance. It's the presidential reality show. And, you know, I was saying to one of my colleagues that, you know how, I mean, Obama doesn't go anywhere without his teleprompter. I mean, everything he does is staged. There's hardly ever a press conference, and when it is one, they know who they're going to be talking to. And so everything is staged. He was out there without his mind-held device, his teleprompter, and he just couldn't. There's nothing. There's nothing. They're both talking about nothing. And I don't know how people could keep supporting this baloney. And the prostitutes out there making excuses. You know, well, you know, maybe it was altitude sickness. Right? It's Denver. Come on, you know.
Yeah.
One after another. How about the guy doesn't have it? What you see is what you get. A performer. That's all they are. It's a disgrace.
They're both performers, and we're starting to get the feeling that these guys are Tweedledum and Tweedledee. They're both cut from the same cloth.
Exactly. That's what I said. A stuffed shirt and an empty suit.
Yeah.
Take your pick.
I love the slogan you came up with, don't vote, stay at home. Tell me something about that.
I've been in this business for 32 years. I began my career long before that. I was the assistant to the Secretary of the New York State Senate. I used to run political campaigns in Westchester County, New York, the richest county in the United States, particularly in that time, back in the early 70s. And I taught at St. John's University, American Politics and Campaign Technology, designed and taught it. I spent 6 years in D.C. as a government affairs specialist for the chemical industry. One of our chief writers in the Trends Journal, Dr. Paul Craig Roberts, former Assistant Treasury Secretary under Ronald Reagan. We're guys that know what it looks like. And this looks really bad. I've never seen a show this bad. And the point being is that people are now saying, I'm voting for this one or that one because he's the lesser of two evils. And it's a phrase that just rolls off people's tongues. Now, I ask you, would you go out or marry a lesser of two evils? Would you do business with a lesser of two evils? Would you associate with lesser of two evils?
I think I'd stay single.
Stay single. And now people are voting for an evil to run their lives in their country. And I'm a political atheist. I don't believe in political religions. I've been around them. And I certainly won't bow to a political god. And the God that I believe in, would look at it as a sin if I cast my vote for an evil, be it lesser or greater. Evil is evil. And by the people's admitting it, they're saying, I'm going to vote for a lesser of two evils. Well, guess what? What do you think you're going to get in return?
Evil.
You got it.
Yeah.
Evil deeds by evildoers.
All of this played out against the context of a declining American superpower, what you're calling the Ubermensch, the Superman.
It's gone.
Yeah.
It's gone. America's in a leadership crisis right now, and we don't have a leader. And the people, there's this wonderful Hindu saying, when the student's ready, the teacher appears. I really believe that when the people are ready, the leaders will appear. But the people aren't ready. They're living in denial. We write it extensively in the Trends Journal as we begin it, a new beginning or a bad ending. And I make the point, and this is where I am in my life in looking at all of this. It's up to the individual. The individual has to change. And if you eat junk, you drink junk, you know what the result is going to be.
Junk.
Junk. Your body is going to be junk.
Yeah.
Your mind is going to be junk if you take in junk. You watch junk entertainment, you read junk, you listen to junk news. If your life is filled with junk music, guess what? You're going to have junk.
Yeah.
So right now, the people, I believe, have to take a good look at themselves and say, is this what I want for myself and for the future? And here's the point that I make. In the presidential reality show, I don't care what country, you got a Harper up here. It's all the same. It's all smoke and mirrors. It's a stage show. Every time that these cats show up, man, there's a red carpet. The horns are tooting, everybody's saluting, So they set the stage to make the people think that these people are superior to us. They know more than we do. They're better than we are. So, what happens? People start believing them. And so as I look at it, and again, having been where I've been and know what I know, I make this really clear. If Bush can, if Clinton can, if Obama can or Romney can, then you can. And I can. Unless, of course, you think their mother's better than yours. So just to keep this polite, it doesn't get out of hand, we'll call it equal. Who do these people think they are?
Yeah.
Who do they think they are? These grand proclamations, everything that they've done, they've turned into failure. I'm not making this up.
No, it's true.
Take a look at the economic situation.
Yeah.
Brilliant. Oh, yeah, we fixed it. What did you fix? You gave all our money to a bunch of your buddies, whether it's in Europe or the U.S., everywhere else, to keep the Ponzi scheme going. Look at the wars you're losing. Oh, great job you cats did over there in Libya. Yeah, I think Canada was on board with that one.
Yes.
Oh, yeah, wonderful situation. Yeah. And now what do they do? Could more have been done to protect the ambassador? How about all those soldiers that get killed every day?
Yeah.
How come I don't see the commander-in-chief and the secretary of state and honor guards showing up for them? You know why? Because they're better than we are.
Yes, of course.
They're all better than we are. And that's what the people think. And that's what the prostitutes keep punching in their minds. So until that changes, nothing's going to change.
Gerald Celente from Trends Research with us on This Week in Money. One of the things you touch on a lot in the Trends Journal, you've been talking about for a while, it's getting closer and closer than ever, the first great war of the 21st century. Obviously that's got to take place in Iran or Israel, somewhere in the Middle East.
It's going on. It's going on in front of our eyes. All over, by the way. And by the way, it's great seeing you in person. I just really want to say that. Yeah.
You too.
Yeah, it's nice. Let's add them up. You mentioned the Middle East. Go to Yemen. Wonderful situation over there. Beautiful times. Yeah, another dictator propped up by the United States for 40 years, and they got a new guy in there. They had an election, though. That's the way the prostitutes report it. Yeah, but only one guy ran. That's an election? So now, of course, the people hate the guy. The people are starving. So the revolution's going on there. America, Obama, the great Nobel Peace Prize winner. Phew! How many drones is you sending this week, Obama? Same. Now you go over to Bahrain. Wonderful situation. But don't call the head of Bahrain a dictator.
Oh, no.
He's an emir. Only bad guys are dictators and autocrats. Emirs, they have credentials. Yeah, they have families that have been robbing power for a couple of generations. So there's a revolution going on there. Matter of fact, Saudi Arabia has invaded Bahrain
yes.
at the behest of the Bahraini government to put down the Shia revolution. Then you go over to Syria, and you can see what the Gulf League, or I like to call them the Little League, started in taking out Syria. And then, of course, with the support of NATO countries, and now Turkey's getting involved in that. And then you read, again, the language. Turkey's a NATO member, and on the NATO charter, if one NATO member gets attacked, then all the NATO members join in.
Looks good on paper.
Yeah, so they're setting it up for that. Then, of course, there's Libya, we just spoke about. Yeah. And then let's move over to Europe. Lovely times going on there in Greece. They love going out to the streets every day because they have nothing else to do. They don't have any money. Oh, let's go up to Spain. Oh, yeah, only millions of people take to the streets all the time because they're broke too.
Yes.
And the governments are stealing more money from them as they're doing over in Greece. And not to forget Portugal. Ireland's already in a depression. This is class warfare. It's still going on in Egypt. Nothing has changed. All they've done is put in the Muslim Brotherhood, which by everything that we can find out, and the same thing going on now in Tunisia and Indonesia, is that the Brotherhood are operating as fronts for the military. Because if you look at the new constitution that just came out in Egypt and what we're reading from it, the military still has all the power. The people that were the ones responsible for bringing down the Mubarak government, they don't have any place in the government at all, not a one of them. The people that put their lives on the line and others that lost their lives, everything they fought for. So what we have is class warfare going on around the world. That's all this is, and the parallels tie together. The Panic of '08, Great Depression, currency wars. We heard Manteiga last week, the Brazilian finance minister, saying about the currency wars because of these countries like the United States and the European Union devaluing their currencies, along with China lowering their interest rates to continue to lower the value of their currency so the exporters could export more. Trade wars. Tune into the presidential reality show. Pick up the papers of this last week. Oh, they just put some tariffs on Chinese solar panels coming in. Listen to the candidates bashing China. It's going on around the world. It's going to heat up. Trade wars and then world war. We've seen this play out before. The crash of '29, the Great Depression, currency wars, trade wars, World War II. It's always about money and power.
This Week in Money is archived online at talkdigitalnetwork.com.
Gerald Celente, our guest here on This Week in Money. Let's talk about the summer of this year, which is, you're pointing out, a lot like the summer in the 1930s. Eerie.
Well, even here up in British Columbia, you haven't had much rain. Thought it always rains up. Only when
it's
I come in
supposed to be
town
raining all the time. Even we haven't had any rain.
Yeah.
So how's this playing out
well,
in
it's
the
again,
world
you have the
politics?
Dust Bowl going on.
Yeah.
You have corn prices, soybean prices skyrocketing. You have in the United States 64%. And it's, again, the parallels are eerie. We have the Dust Bowl. You have 64% of the United States right now in drought conditions. Yeah. You have major and minor companies, slaughterhouses, the packaging plants, the places where they're finishing off the livestock. They're going out of business. They can't feed them. They can't afford the feed. They're feeding cows candy, sprinkles, those little things you put on ice cream cones.
I read about this.
Yeah, they're buying the cheapest crap to feed them.
Yeah.
So what's going on is that right now you're seeing a lot of animals come to slaughter because they can't afford to feed them. Now you're going to start seeing prices start to rise. And this is not only happening in the U.S., it's happening around the world. Different climate conditions in different places. And again, going back to making the parallels, I mentioned about Spain. Kind of funny, isn't it? The Spanish Civil War before World War II. The Spanish Civil War's begun. Catalonia is now talking about secessionism. The people are taking out to the streets. They have 50% plus youth unemployment. I mean, just figure it out.
Yeah.
Young people, young guys, testosterone raging through their body,
and
raging
unemployed.
mad and unemployed. Yeah. You think they're going to hit the edges?
Of course. One of the stats that you covered in the Trends Journal, we were talking about food, and this just shocked me. People in developing countries spend twice as much of their income on food as we do here in the privileged West.
Yeah. So figure it out. If they're spending 30-40% on food and they're only living on $8 a day, they're angry.
Yeah.
All this baloney that we all heard about, the Arab Spring, we wrote about it before it happened. It was no Arab Spring. You have in Egypt, for example, 80 million people living on, more than half of them living on $10 a day. In a country that could maybe they could support 20 million people, given its size and its resources. Far too few have much too much, and way too many have much too little.
Why do we continue in this mistaken belief that a little democracy is going to be good for this area?
Yeah, it's not democracy. And that's the baloney of it all. Again, you go back and you have a few people running the show. These are not democracies.
Yeah.
I mentioned about what went on in Egypt with the last election. Well, only like about 42% of the people voted. Mm-hmm. You take the United States. You want to call this a democracy? Tell that to the sixth graders. What democracy? Yeah. You got the Bananos and the Gambinos running the show. You can call them the Democrats or the Republicans. There's 535 senators and congressmen in total telling 312 million people how to tie their shoes. Or they're just not representative. They're not representing the people. Do the numbers. You know what they represent? The people that give them the most amount of money. In adult world, they call it bribes and payoffs. In the political world, they call it campaign contributions.
Yeah. What do you say to our friends here in Canada who think that things are different here, that we are somehow insulated from what happens in the rest of the world? We are unrelated to what's going on in the States. You're saying, wait a minute, Canada is simply a dominion of the U.S.
Well, in many ways, you're still tied to Mother England pretty tight over there. Do I have to salute when the Queen walks in, Louis Armstrong had that great line when he played before the Queen. And he said to her, "This one's for you, Queenie." But anyway, what's going on? It's the same thing. It's a very simple formula. If Europe and the United States don't buy, and you can see that we're not, you look at the new numbers coming in on recession numbers, IMF numbers, they've downgraded their assessments. If the U.S. and Europe doesn't buy, China doesn't make. If China doesn't make, Canada, Australia, Bolivia, Chile,
all
they
these
don't
resource
export.
countries. Yeah.
So you're going to get hit too.
Yeah. We're talking to Gerald Celente here in This Week in Money. Let's talk about markets. The summer rally basically over, the Fed admitting that they're out of ammo. Where do we go from here?
Well, you know me. I've been talking about gold and silver forever.
Yeah.
You go to our Trends Journal site, trendsjournal.com, look at the forecast page, and there's in 2001, I call the beginning of the gold bull run, when gold was at $275 an ounce. I have a Trends in the News feature when you subscribe, when gold was at $1680. I said the breakout point was $1670, and I bought back in at that time. Again, I'm always buying into the market. And of course, now as we speak, it's around the 1770 level. My forecast for gold: if gold stays over 1770 to 1780 range for a good week or so, just keep staying stable. It has to, find some strengths, pop up to the 1790s, float around, keep moving around in that era realm. I believe we're going to be beginning the next gold bull run. They cannot keep printing this digital money not worth the paper it's not printed on. They're devaluing the currencies. I mentioned China. China is lowered interest rates again. They're dumping money into the banking system, lowering requirements. You look in Europe, they're buying up all of these worthless bonds. Where are you getting the money from? I'm going to make it. QE3.
QE infinity.
Yeah, so why not gold and silver?
What about the manipulation that's obviously going on in the gold and silver markets?
Well, we all know that it's not in the central bank's best interest to have strong gold and silver. So they're going to do everything they can to kill it. And they've done it. You know, if you go back and you look at the market downturn in gold, you could put the date on it. November 1st, right around there, 2011. You know what happened then? That's the day we woke up and found out that MF Global...
John Corzine.
Right.
Yeah.
Stole segregated accounts. I can't find $1.6 billion, man. Don't know where I put it. Jeez.
It was here this morning.
Yeah, I don't know what happened. Somebody must have... The janitor took it.
Yeah, whatever happened to him? What's going on there?
Whatever happened to him?
Yeah.
See, this is why I'm a political atheist.
Mm-hmm.
None of the Obama apologists call their guy out on it. He has not brought one major white shoe boy to justice.
Yeah.
The people that brought down the financial system. Corzine, John Corzine, a bundler for Obama's campaign to the tune of hundreds of millions of dollars. Former senator of New Jersey, former Democratic governor of New Jersey, former head of the Goldman Sachs gang.
Of course.
Now, just by coincidence, Eric Holder,
the Attorney General.
Attorney General. Yeah. I got something from the hold. Eric Holder worked for the same law firm, the white-collar crime syndicate law firm that represents MF Global. You think there's any coincidence there?
No.
Nobody. He never got called up on charges.
Yeah.
Not one of them. Nobody. They get a little guy every now and then. They'll break one.
Lots of talk about more regulation, but no arrests.
Yeah.
Yeah.
And there's no regulation. It's still the too big to fails became bigger. They stole more money from the people. And then when they do get caught, they pay a fine and they neither admit or deny any wrongdoing. And you never see a head roll. But hey, make sure, you don't go through a red light or you're 30 days late on your parking ticket because they'll arrest you and throw you in jail. Oh, and by the way, the good old USSA under Obama, friend of the court, friend of the Supreme Court, they passed a while ago, back in several months ago, they voted, the Supreme Court did, that if you get arrested, let's say you had one drink too many, and they throw you in jail, take off your clothes. Bend over, spread your legs, strip search you. Yeah. But steal a couple of $1 billion, tens of billions, it's okay.
Yes.
It's all right. So that's what's going on, and this is what you see. Going back to Egypt, it all ties together. Remember how they hated the police?
Yes.
That's what happens in fascist countries when they're breaking down. The police get more power, and they step on the little people, and you're seeing it all over the states.
Yeah.
Yeah. Every day you pick up a thing. A cop, shoots a lady in a wheelchair. Oh, they did. They shot a guy a week ago. He was in a wheelchair, only one arm and one leg.
Wow.
And the police, I think it was in Texas. Well, of course it would be in Texas. He said that he was waving something threatening at him. So this is what happens in a society that's breaking down. Don't get caught with that lemonade stand selling lemonade.
But steal $2 billion, then it's okay.
It's okay, because you're one of the boys.
We're talking to Gerald Celente from Trends Research here on This Week in Money. Let's talk about the future, your economic forecast. Pretty grim. No recovery, more decline, and potential disaster. How are we going to protect ourselves as individuals from this?
There's not a lot to do. And, we were talking before about the wars, and we just briefly went over them. I left out Iran. How could I leave out Iran? It seems like every third day the Prime Minister of Israel, Netanyahu, is threatening with red lines or something to bomb.
The cartoon bomb, yeah.
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 And if they go to war against Iran, it's the beginning of World War III.
Yeah.
So forget about having any guns, gold, or getaway plan. Life is going to turn to hell.
Those are the 3 Gs, right?
Yeah.
Yeah.
And I say that in all sincerity. You know how they say that generals are always fighting the last war?
Yeah.
Yeah, guess what? They can't win the war they're fighting now. The next one's going to be wars of weapons of mass destruction, suitcase size, poisoning poisoning water supplies, nuclear bombs, suitcase size. It'll be horrific. Weapons of mass destruction. That's what the world is going to be facing if we go into another round of wars. And so all I can say to people is do the best you can to be as self-sustaining as you can.
Yeah.
Know where your money is, because if it's in the bank, it's as good as putting it in John Corzine's pocket. It's not yours unless you have it. So get real with it, because they do things like, holiday, let's have a bank holiday. You can't get your money out. And when you get it out, we're going to devalue it.
Yes.
That's what they always do. So unless you have your money, that's what I'm saying. I'm not telling people what to do, but for me, again, I have as much money as I can out of the bank. I only try to keep money in there to run my operations. I have most of my money in gold and silver.
Somebody asked me a couple of days ago, with all the talk about how awful things are in the U.S., and the general tone of the Trends Journal, somebody said, is he planning to leave the U.S.?
No.
Why?
Well, what happened was, interesting story. I was in Berlin recently, and something didn't hit me right within the first half hour. And we were opening up the Trends Journal there in the Trends Research Institute, and my colleagues gave me a quick tour around Berlin. And I'm saying to myself, my God, this place had to be grander than Paris in the 1930s. Mm-hmm. And the grand boulevards and the structures, it's Germans, and the sidewalks wide enough for cafe tables, several deep, and for people to walk and to bicycle on, wide boulevards with trees, and nothing over maybe 12, 14 stories, the buildings, lights shining in everywhere, greenery, parks. And then you see an old building maybe from 1880s, and then all new construction from bombed out World War II, and then another old building. And everywhere you go, you see a replay of this, even, outside the outskirts. And I'm saying to myself, these are the Germans. How can they let a two-bit freak destroy their country? And then I'm Italian. And I said to myself, my God, the same thing.
Mussolini.
Yeah. And you look at the people, Da Vinci, Puccini, Rossini, Caruso. And we eat better than the Germans. So I came home, and right near my building on the fence, I'm on the most historic corner in the United States. I'm right off it.
You're in Kingston, New York.
Right.
Okay.
The only place on each corner where there's a pre-revolutionary stone house. And one of them was for sale. And I got back on April 23rd. And that Saturday I went to a party at some friend's house, and they told me, that building, the Franz Roggen house, just went up for sale. It's beautiful. Do you know anybody who wants to buy this? One of your friends. Of course, I couldn't get anybody interested. So I decided to buy it myself. And the reason I did is that this is where the first American Revolution began. And I realized that wherever you go, there's freaks everywhere. Yes. You can't run away from them. I mean, look at the freaks we have in the United States. Yeah. George Bush, Dick Cheney. Marvel comic books couldn't come up with a better character than him. I mean, starting 2 wars for fake reasons.
The guy makes Lex Luthor look good.
Yeah.
Yeah.
So there are freaks everywhere.
Yeah.
So I said, I'm staying. So anyway, I'm not leaving. I'm not going to run away because of 2-bit freaks. And I'll make this really clear. If any of them have a problem with me, let's come over and talk about it.
Yeah.
Leave your goons behind. If you want to talk man to man, we could discuss this. But I have to tell you, I'm sick and tired of these people hitting the platform and telling me what I should believe, what I think, and what I should do. So I'm staying.
Gerald Celente is publisher of the Trends Journal. He's founder, director of the Trends Research Institute. You can find out more at trendsresearch.com. Don't forget on Twitter, Gerald Celente, and YouTube, the Gerald Celente channel. Hey, Gerald, it is a pleasure.
Oh, thanks so much. Good to meet you.
This Week in Money is archived online at talkdigitalnetwork.com.
David Skarica is author of The Great Super Cycle, Profit from the Coming Inflation Tidal Wave and Dollar Devaluation. And you can find Dave on the internet at addictedtoprofits.net. Hey, Dave, welcome back to This Week in Money.
Hey, how you doing?
What kind of a week has it been in the market? Not a good one. The Dow heading for its worst day since June, down more than 200 points today on lousy earning reports from Microsoft, GE, and McDonald's. And let's not forget, it's a big anniversary. It's the 25th anniversary of Black Monday. Way back on this day in 1987, the Dow losing almost a quarter of its value.
Well, on the market side, I think that what's really happened is, we had this big run after the announcement of quantitative easing, and we have to realize the reason that all this easing is going on top of what's going on in the United States, what's going on in Europe, all this loosening, is because the economy isn't very good, and that's why we need all this loosening. So I think that's what people have to realize, and it doesn't surprise me that most of these earnings numbers are not coming in that good because, what happened when Europe started to weaken in 2010, we still had strong economies in Asia, and of course now we're seeing China and India slow down as well. So that doesn't really surprise me. And what I'm actually expecting is this weakness to continue for the next few weeks. And I think we'll get the next leg higher starting in November or December when whoever's elected president in the United States pushes back the fiscal cliff for another year or so. So that's what I'm expecting to happen. And I'm looking for a full-out push back. I'm not looking for any tax increases or any spending cuts in 2013 as long as rates are as low as they have. And I think they'll get a full push back for one more year, and that combined with all this liquidity we're seeing into the system will probably extend the equity rally into the first quarter, second quarter of next year.
Black Monday talk all over the internet today, and everybody comparing what's going on today with 1987. A whole lot of things are different, and we are certainly not looking at the kind of conditions that precipitated the crash of 87, are we?
No, the other thing about this crash in 87 was you had this secular low in stocks in 1982, and then you had a 5-year rally when the market went up 250% in 5 years with only one correction, a 15% correction in 1984. And, you started getting valuations towards like the late teens, 20 times earnings on the Dow. And everything kind of just got overextended for a short period of time. And this was like really, that was when computer trading was first installed and there were no kind of safeguards against the market being whipsawed in either direction. They're still trying to figure things out. So I think I don't think right now you can compare it. And another thing too is, like I said, that was the start of a 5-year, and actually 5 years into a 20-year or 18-year secular bull market. Right now we're 12 years into a secular bear market where the Dow, S&P, NASDAQ are all well below the 2000 highs, and adjusted for inflation, really well below those highs. So I don't think we're going to see a crash at all. If the markets are topping out, it's going to be more of a long, drawn-out bear market, not a one-day crash. And part of the reason, quite simply, is when you get a crash, you have a lot of enthusiasm going into the crash. If you look at like 2000 to 2002 or 2007, 2008 with the internet and dot-com bubbles, 1987 with that big run off the bottom, 1929 with the roaring 20s, 1989 in Japan with their bubble. We don't have any enthusiasm in this market. There's actually continued to be net outflows out of the stock market for the last year, despite the market rallying. So I really don't see us having any sort of like precipitous crash. Like I said, even if the market's topping, I think it'll be more of a long, drawn-out bear market.
Interesting to see amongst all the stories, the anecdotal stuff about 1987. A couple of tips for looking forward to what happens when markets do inevitably correct. Here's one from MarketWatch.com. Number one rule to remember, stay objective when others get emotional.
I think that's the biggest thing about markets is markets tend to, and again, if you want to use an analogy now to what's going on, is that everyone gets all panicky and looks at the short term and all that sort of thing, but my analogy now is, and I think after this pullback here that it will pick up again, is I think that the European markets are very cheap, are going to continue to see a big rally. And we've been talking about this for a while, and they already have seen a big move off the lows of the spring. So I think you just can't get whipsawed by one-day moves, and then the narrative becomes very negative and panicky, and then you get blinded towards the valuation, the potential of the upside after those kind of crashes happen. I think you got to look at it this way, that most crashes, almost all crashes, end up being buying opportunities. And I think people kind of ignore that, and they get whipsawed by the doom and gloom and end up losing a lot of money by maybe shorting at the bottom or selling at the bottom and that sort of thing. And I think the other side of it is, if you go back to the mid-'70s, you have 74, you have 87, you have, the early 2000s, you have 2007, that really on every 5 to 10 years sometime, you're going to get some kind of panic and some kind of buying opportunity in the market. So don't chase stuff higher as well when stuff is going through the moon. And even if you have to wait a few years, patiently wait for those big corrections to buy, because your returns off those corrections will always be larger than, when you're buying high, near tops and that sort of thing.
David Skarica from addictedtoprofits.net, our guest here on This Week in Money. The other big market story this week, Google's third quarter earnings released early by mistake. They're blaming it on their printer, but the bad news for Google, a big miss on profit and revenue this week.
I think the thing you have to watch is, and I'm an Apple guy too, with those stocks, with Google and Apple, is it's just like basic mathematics. Like, how high can they really go? The problem with Google is, for it to double, it's going to go over $500 million market cap. For Apple to double, Apple's got to go over, be the first, $500 billion. Apple's got to be the first $1 trillion company. So it's just basic math. Well, okay, on a valuation side, they're not hugely expensive. Google trades at 17 times earnings, Apple at around 14 times earnings. And, they're very lowly indebted companies and that sort of thing. And I think Google, what happened too, is they're getting short-term pain with the takeover of Motorola for long-term gain. But again, this is why I kind of like to buy the total contrarian and buy beat-up assets. Like a lot of technology and telecom companies in Europe that pay big dividends are up 70, 80, 90% off their highs. And I'd much rather buy one of those than buy an Apple or Google at these levels. Like, really, the time to buy Apple was 10 years ago when it was, $8 a share, or even after the financial crisis, it got down to 80 a share. Again, those things have to drop a lot, and you can't chase them because they're the current hot sector or whatever. So I think that it's more of a lesson in valuation when you just see the size of their market cap, and you have to think to yourself, how do these valuations play out? And how much upside is in the stock? And again, if you just looked at Google and Apple from that point of view, I'll give you a perfect example. One of the stocks I watch is Portugal Telecom, which is a big telecom company in Portugal, which, the technology company. It's gone from a high of 15 to as low as 4, and now it's about $5 a share. Well, for that stock to rally 50%, all it has to do is rebound to roughly $7 to $8 a share, which is half of its all-time high. For Google and Apple to go to up 50%, they both have to go to $1,000.
Good luck.
Nosebleed all-time high areas. So just from basic mathematics, you can see it's going to be easier to make, and disclosures, I own it, 50% in Portugal Telecom than 50% in Apple and Google. And that's all people have to look at is just how John Templeton used to say, is there a better chance of something going up 50%? And that's all you have to ask yourself if you're buying a stock.
Okay.
So if company ABC has a better chance of going up than company, DEF, then you buy company ABC.
We're talking to Dave Skarica here on This Week in Money. U.S. dollar advancing against other major currencies this week. That drove a big sell-off in precious metals. Gold down $20, a 2% loss this week. Silver off almost 5% to $32 this week.
Yeah, this is just a seasonal pullback, in my opinion. If you look at the seasonality of gold and silver, what you'll usually see is exactly what's going on now, is that you get this rally into September, early October, and then a pullback through about the last 2 to 3 weeks of October. So that should mean that we still may pull back for about the next 2 trading weeks and then find a bottom sometime in early November. And again, I think that actually coincides with my fundamental view that after the election, the fiscal cliff will be pushed back, and that will give some legs to the market. So, and gold and silver should rally with that. So I would still look for this, correction to continue in gold, maybe to slightly under $1,700 an ounce, and silver maybe back towards 30. And then I would definitely use that as a buying opportunity. And what's interesting is in the middle of the day, and they did end up down a little bit, actually a lot of the gold shares were up today. So they're actually holding up quite well on this correction. They're only up a few percent from their high. And I think that kind of bodes well for them and for them to continue to, outperform on this move.
Another big week for oil. It dropped 2%, Dave, this week to $90.
Oil actually doesn't really, I'm bullish on oil, but it actually doesn't really interest me that much. Okay. I think that in this cycle, we have sector rotation in bull markets, and in this sector rotation of the commodity cycle, I think oil outperformed in the first move higher. Like, for example, in the 70s, sugar actually reached its high in the 73, 74 phase of the commodity bull market and didn't on the next wave higher, where a lot of other commodities went significantly above their 73, 74 highs in 1980. And so sugar led on the first move and then kind of lagged on the second. And that's what I think that oil and gas is happening here. U.S. actually domestic production is near records high. We're still seeing increased production from the oil sands. We may see these oil pipelines go into the U.S. If Romney's elected, and that might happen even if Obama's elected.
Sure.
So I just think that, and obviously you got a slowing economy, and so I think that oil, while I'm long-term bullish, I think it led in like the 2000 to 2007 move, and that it will actually continue to lag here. And I'm more interested in the precious metals, in the soft commodities, the wheat, grains, those types of things. I think that's what I think is going to continue to lead in the next phase of commodities bull market. So, yeah, do I like oil? Yeah. Do I own some oil stocks? Yeah, because the stocks are actually very cheap. A lot of them are only priced for about $70 oil. So, yeah, I like oil, but I think it's going to continue to lag here in the intermediate to long term.
David Skarica is author of The Great Supercycle, Profit from the Coming Inflation Tidal Wave and Dollar Devaluation. And you can always find Dave online at addictedtoprofits.net. Hey, Dave, it's always good to talk to you. Thank you, sir.
It's good to speak with you. Thank you.
Thanks to our guests, Gerald Celente and David Skarica. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with another edition of This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.